In this episode of Explained, we're diving into search funds.
Ah, yes. A really interesting model.
It really is. It's a fascinating corner of the business world.
Mm.
And the basic idea, well, it's about entrepreneurship through acquisition.
Exactly. Instead of starting totally from scratch.
Right. So instead of that long grind building something brand new, you have these really driven individuals finding already successful small to medium-sized businesses,
Buying them.
buying them, and then stepping in to operate and grow them, take them to the next level.
Yeah, it's a unique path.
So today, we're going to unpack how this all works. We'll also look at how one particular firm, Kjøller, plays a pretty vital role in, funding these ventures.
Absolutely. And I think what's really compelling is let's say, the efficiency of the search fund model.
Yeah.
You're leveraging something that's already proven.
Less risky than a pure startup, maybe.
Well, you're avoiding some of those really high early failure rates you see with startups. So at its core, a search fund journey, it really has two main phases. First, there's the search phase. That's where these entrepreneurs are actively looking for a company that fits.
Right, the hunt.
The hunt, yeah. Then comes the acquisition phase where they actually buy the business and, step in to run it.
And we should be clear, these aren't just like casual browsers.
Oh, definitely not.
Typically, you're talking about people with pretty strong business backgrounds, maybe an MBA, lots of relevant experience.
That's the usual profile, yes.
Mm-hmm.
Their goal isn't really to invent something totally new.
No, it's more like finding a diamond in the rough. Or maybe just a solid gem that could be polished.
That's a good way to put it. Find a solid, established company, one with untapped potential, and then apply their expertise to unlock that growth.
Okay, so let's start with that first hurdle then. The search phase. How do they even begin? Finding these companies sounds like finding a needle in a haystack.
Well, the very, very first step is actually getting funding just for the search itself.
Money just to look.
Yeah. These individuals need capital. Think about it.
Mm.
Travel to meet sellers, deep research into industries, doing that initial legwork, the due diligence on potential targets.
Right, that all costs money.
It certainly does.
Mm-hmm.
And this is actually one area where firms like Kjøller can be incredibly valuable.
Providing that early stage funding.
Exactly. That crucial seed capital that allows the search to even happen.
Hmm.
Then the entrepreneurs, they undertake this very focused process, identifying businesses that meet specific criteria they've set out beforehand.
So definitely not a shot in the dark. There's a real strategy here.
Oh, absolutely. A defined strategy.
Okay, so let's fast forward. They've done their homework, maybe spent months searching, and they found the business. They want to buy it. That kicks off the acquisition phase, right?
That's it.
How does the much larger amount of money needed for the actual purchase come together? Because that's a big jump.
It is a big jump, exactly.
Yeah.
So once they've identified that target and, crucially, there's mutual interest from the sellers, then a much more significant round of capital raising begins. This is to finance the acquisition itself. And it often involves a mix of different funding sources. It's rarely just one thing.
Like what kind of mix?
You might have traditional loans from banks, senior debt. Sometimes the sellers themselves might finance a portion of the deal seller financing.
Oh, interesting.
Yeah. And then there's equity investment. That's where firms like Kjøller come in again, alongside other investors.
And Kjøller's contribution here, you mentioned, is something specific. Flexible junior capital. What does that mean in practice?
Right. So junior capital basically means it sits behind the senior bank debt in terms of repayment priority if things go wrong.
Right.
It's a bit riskier for the lender, so it usually comes with different terms.
Okay, and the flexible part.
That's key. It often means the repayment terms might be more adaptable, maybe tied to the company's cash flow, especially in those early days after the acquisition when things might be tight.
Gives the new owner some breathing room.
Exactly. It can be really crucial in just bridging that final gap to get the deal done. Kjøller often invests up to around $500,000 USD for this purpose.
$500,000. That could definitely be a game changer in making a deal happen or not.
It really can. It plugs a specific hole in the financing structure.
And does Kjøller have a particular size of company they like to see acquired?
They do. They've indicated a preference for acquisitions generally in the range of, say, $5 to $8 million USD,
Okay.
which translates to roughly 25 to 50 million Danish kroner.
And geographically, are they focused somewhere specific?
Their primary focus tends to be Denmark and the UK, but, they're also open. If there's a really compelling opportunity elsewhere, they'll look at it.
Makes sense. Pragmatic. Look for the good deals.
It's about strong fundamentals and that growth potential, wherever it might be.
Okay, so the deal is done. Acquisition complete, champagne popped, paperwork signed. What happens next? This is when the search fund entrepreneur finally gets the keys, right?
Precisely. Now comes the operating phase. The entrepreneur transitions fully into that leadership role within the company they just bought.
So CEO, managing director, that kind of thing.
Exactly. Their focus shifts completely.
Yeah.
Now it's about implementing their strategy, maybe streamlining operations, driving growth, and ultimately increasing the value of the business over time.
This is where their own skills really come to the fore.
Absolutely. Their business acumen, their operational expertise, they're not just an investor anymore. They're the active manager driving the ship.
So let's think about it from the entrepreneur's perspective. Why go this route? Why the search fund model compared to, say, the maybe more glorified path of starting your own company completely from scratch?
Yeah, that's a great question. For the entrepreneur, there are some really compelling advantages.
Like what?
Well, first off, it's often a much quicker route to actually leading an established organization.
Yeah, you soup those first few brutal years.
You skip potentially years of building something from zero, facing all the massive uncertainties that come with that. You step into a business that ideally is already generating revenue, has customers, has processes.
Okay, speed to leadership. What else?
Well, the potential for significant financial reward is obviously a huge motivator.
Right.
If they're successful in growing that acquired company, the returns, both for them and their investors, can be substantial. They're leveraging an existing platform for growth.
Makes sense. You're not starting from zero value.
Exactly.
And flip side, what about the investors, the people putting up the cash, like Kjøller or others? What's in it for them?
For investors, search funds offer access to, well, potentially high-growth opportunities in the small to medium enterprise space, which can be hard to access otherwise.
Okay.
They're essentially backing talented, highly motivated individuals, the searchers who are laser-focused on maximizing the value of one specific business.
So alignment of interests is key.
Very strong alignment. The entrepreneur's success is directly tied to the performance of the company they acquire and run. Plus, for an investor's portfolio, it can offer some diversification away from, say, typical venture capital, because you're usually investing in established, profitable businesses, not pre-revenue startups.
Interesting. Okay, so we've touched on funding a few times, but it's clearly, the lifeblood of these search funds. Let's really spend some time on Kjøller's role here. They seem quite involved.
They are. Funding is absolutely critical, as you say,
Yeah.
and it's needed at both stages, that initial search and then the much bigger acquisition. Kjøller actively participates in both.
Right, they invest in both phases, not just the final deal.
Correct. They've made that quite clear.
And their specific approach, this flexible junior capital, can we unpack that a bit more? What does it really look like?
Sure. So we mentioned the junior part. It sits behind senior debt. The flexible part often comes down to the actual terms. For example, the repayment schedule might be structured to be, let's say, more gentle in the first year or two after acquisition, aligning with the company's projected cash flow, giving that new leader breathing room, as you said.
Got it.
And many of their deals, as we touched on, involve a mix. It might be structured partly as debt, which needs to be repaid with interest, but also include an equity kicker.
An equity kicker? What's that?
Essentially, it means that besides getting their loan repaid, Kjøller also gets a small ownership stake in the company.
Ah, so they benefit from the future growth, too.
Exactly. It really aligns their long-term interests directly with the entrepreneur's success. They win if the company value grows. They become partners in that growth.
That sounds like they're really committed, not just providing a loan and waiting for repayment.
That seems to be the philosophy.
Yeah.
And they've been doing this for a while, building up experience.
Yeah, you mentioned their track record earlier. Can you remind us?
Sure. Since 2008, Kjøller has made, I believe the number is 76 investments overall. Their specific focus on search funds really gathered steam around 2018.
Okay.
And the recent numbers show that commitment. Last year, 2024, they backed 6 search fund acquisitions. And already this year, 2025, they've been involved in 2.
Wow. Okay. So they're active. That volume speaks volumes, doesn't it?
It shows a significant ongoing commitment to this specific investment model.
So if I'm listening to this, maybe I'm thinking about launching my own search fund. What are the big advantages of trying to partner with a firm like Kjøller? What do they bring to the table beyond just the cash?
Well, they highlight several points themselves. A big one is flexibility, which stems from investing their own capital.
Ah, not managing external LP money with lots of rules.
Exactly. That gives them more freedom. They aren't necessarily bound by the really rigid rules or investment committee structures you might find in larger funds. This lets them tailor the financing structure to the specific deal.
That could be huge.
It can be. They also emphasize their speed. They mention potentially providing a term sheet, that initial outline of the deal, often after just the first meeting.
That's fast in the M&A world.
It is. And in acquisitions, speed can definitely be a competitive advantage. You don't want a great deal to slip away because funding is slow.
Absolutely not. What else makes them stand out as a partner?
Well, obviously, their extensive experience with those 70-plus investments means they bring a lot of knowledge. They've likely seen many scenarios play out.
Pattern recognition.
Yeah, pattern recognition, understanding the pitfalls. They also talk about a relatively short due diligence process. They aim for about 2 to 4 weeks once a term sheet is accepted, which is pretty efficient.
Keeps the momentum going.
Right. And maybe softer factors, but still important. They describe themselves as being easy to work with. That collaborative spirit can make a huge difference during a potentially stressful acquisition and integration process.
Yeah, you want a partner, not just a bank.
That seems to be the idea. They also point to the diverse expertise within their own team, a straightforward, pragmatic, honest communication style.
No beating around the bush.
Apparently not. And interestingly, they mention a willingness to help if things don't go exactly as planned, which, let's be honest, can happen in business.
That shows real partnership, I think. Sticking around when things get tough.
It suggests a long-term view. They also have an entrepreneurial background themselves, which likely helps them understand the challenges the searchers face.
Empathy from experience.
Could be. And looking ahead, they might also be able to help with future funding rounds if the company needs more capital for growth later on.
So, a potential long-term financial partner, too. It sounds like a pretty comprehensive package.
It aims to be.
And getting in touch seems straightforward. You mentioned a quick response time.
Yeah, they have a confidential application process online, and they state a goal of responding within 24 hours, which is impressively fast.
Very responsive. So what are they fundamentally looking for when they assess these opportunities? The people, the businesses.
They keep it quite focused. They talk about looking for 3 main things. Good people, strong leadership potential in the searcher is key.
Makes sense.
Then a good product or service the underlying business needs to be solid, have value, a decent market position.
Right, good fundamentals.
And finally, the potential, the opportunity for real sustainable growth in that business under new leadership.
People, product, potential. Easy to remember.
Pretty much sums it up.
And just to lock it in again, size-wise, that sweet spot is the 25 to 50 million DKK range, primarily Denmark and UK, but they're open-minded.
Correct.
Now, we mentioned examples earlier. Can you give us a concrete name again just to illustrate they're actually doing these deals?
Yes, while obviously full details are confidential, Kjøller has publicly mentioned investing in search fund acquisitions of companies like Northern Industries.
Northern Industries, okay.
So that just serves as a tangible example of their activity in this specific search fund model. It shows they are actively putting capital to work and helping these entrepreneurial transitions happen.
Got it. So let's try and bring it all together then. The search fund model, it's this really interesting, quite efficient way for entrepreneurs to step into leadership by acquiring existing businesses.
A unique pathway to entrepreneurship.
Definitely. And getting the right funding at the right time is absolutely make or break.
The lifeblood, as you called it earlier.
Yeah. And it seems Kjøller has really carved out a niche here. They've positioned themselves as a significant player, offering not just that flexible capital we talked about,
But also the experience, the speed, that collaborative approach.
right, supporting these ventures from the very beginning, the initial search, all the way through to, hopefully, long-term success and growth.
Precisely. It sounds like they provide both the financial backing and potentially some valuable strategic insight along the way.
Well, if you're listening and this search fund idea has sparked something, maybe you're thinking this could be your path, especially the funding part.
Which is often the biggest hurdle.
Kjøller has made it pretty easy to find out more. We've put a link right there in the description. You can click that to connect with their team, talk about potential funding for your own search fund ideas.
Definitely worth exploring if leading and growing an established business appeals to you more than the startup grind.
Yeah, maybe a final thought for everyone listening. Think about it. Could the search fund model work for you, either as an entrepreneur looking for your next move or even as an investor? And maybe look around what kinds of solid existing businesses out there might just be waiting for new leadership for that next chapter of growth.
It's a different way to think about building value, that's for sure. Using what's already there